Yes, sir. Hello everyone. Very happy to have you all here because today we're going to discuss the economic data release. So we're having the UK CPI coming out in about 10 minutes, and me and my colleague Max this time are going to cover it for you. So before you actually realize what's happening, consumer prices account for a majority of overall inflation. Inflation is important to currency valuation because rising prices lead the central bank to raise interest rates out of respect for their inflation containment mandate. At the current moment, the forecast stands at 0%, and the prior figure stood at 0% respectively. A little bit in particular about history. Yes. Yes. CPI, an unexpected reading can have a substantial impact on the movement sterling dollar. Inflation has been practically non-existent for most of 2015, and the June reading came in at 0. So in June, it fell to 0% from 0.1 in the prior month due to a decline in clothing and food prices as well as airfares. BOE Governor Mark Carney expects inflation to remain low in the coming months, but anticipates a pickup by the end of this year. However, rising wages expected to increase consumption, leading to stronger inflation pressure. CPI is expected to remain flat this time, and the BOE is watching it. So let's move on. I would like to share with you guys out there. Good morning, yes, 119. How are you doing? Let's take a closer look on what do economists expect on the UK CPI in this regard. And according to their views, we have the Bloomberg survey summary where the median estimate stands at 0%, average estimate stands at 0% respectively, high estimate stands at 0.1, and low estimate stands at minus 0.1, whereas the number of estimates this time has reached 25. Okay, since we are continuing with the projection, so the economy remains on track for moderate growth, but the expansion won't raise inflation anytime soon. One reason is that the bear market and energy prices rolls on, keeping a lid on pricing pressure. As a result, the Bank of England is under no pressure to start hiking interest rates even as GDP continues to post solid increases. And by the way, this is according to James Paterno from capitalspectator.com, United States. The UK economy is expected to expand by 2.5% this year, according to this month's GDP estimate from the National Institute of Economic and Social Research. The forecast draws strength from the group's current projection of 0.7% growth for GDP for 3 months through July, unchanged from the previous month and the highest since January. Meanwhile, a mild bout of inflation is expected in the near term. Inflation is likely to turn negative again for a couple of months, and analysts with Capital Economics this week. The forecast isn't terribly surprising at this point. Headline inflation has been flat in recent months. In the government's update for June, consumer prices were unchanged from the period a year earlier. Current inflation is still positive, but at a low rate, and one that's been trending lower this year. The question is whether this inflation/deflation bias will weigh on the real economy in the months ahead. An institute forecast plays down this risk, although the recent rise in wage growth appears to have peaked. In any case, inflation expects to remain a dormant factor for the foreseeable future. It would be surprising if today's update on consumer prices for July tells us otherwise. Unlikely, according to Economist Contest's forecast, which sees headline inflation remaining at 0 on an annual basis for the second month running. Okay, let's quickly have a look on the sentiment from Dukascopy community members, your colleagues out there, dear guests and viewers. So as you can see, the traders went rather with the bears this time, 62% versus 30 8% both. And we have a couple of comments. So William B says that the last data release showed a weakness that outperformed the average of the 2050, and he believes that's only an episode, and the average for this year will be 0.2. And Rahman is being bearish and says that the key economic data for CPI and CPI year-on-year will probably be unchanged, while the monthly CPI will probably be less than last, or even as expected. Thus he is bearish on the sterling dollar currency pair. And that's a wrap on the fundamental part. Thank you very much, and I would love to invite Max on the whiteboard to cover the technicals. Max, please.
Thank you very much, Polina. Hello, everybody. I hope you have a great day. So yes, we are discussing the UK CPI data today, and even though we have basically a flat expectation, the median forecast says that the UK consumer price index was unchanged in July, so could probably be the same as in June. We are still going to discuss the negative surprise trading strategy today because there are some small number of expectations that probably lower oil and petrol prices in July could drag the inflation back to the negative territory in July. And for the purpose of discussion, we have the cable today, even though actually it has quite a neutral sentiment at the moment, with a very slight 23 basis point advantage of bullish traders over the bearish ones. And as you can see, concerning the market sentiment provided by other market participants, the majority of them are also bearish. They are bearish on the cable at the moment, while the pending orders in both 50 and 100 pip range at the moment are set to buy the sterling against the dollar, so possibly thinking that the pair may rebound in the foreseeable future. Let's now move on to the strategy itself. As you can see, the pair is trading at 1.56 level exactly at the moment, some maybe 1-2 pips below this psychological mark. And of course, as usually, to project the possible market reactions after the data is released in around 2 minutes and 40 seconds from now, let's have a look at the previous reactions for the same data released in the last 5 months. And the average reaction was actually 36 pips on the cable. At the same time, I should also note that in July, when we have discussed the same data, there was exactly the same result we expect today as well. So the expectations stood at 0 and the actual data was 0, and the reaction was somewhat smaller than this average reaction for last 5 months, and it was only 25 pips. That's why we also can expect a somewhat smaller market reaction to take place today, in case the data is really released in line with expectations and there is no surprise either to the positive or the negative side. So concerning the take profits and stop loss levels, so the first take profit level is currently placed at 1.5580 level, so some 18 pips to the downside from the current market price, and it is supported currently by the 200 period simple moving average line, the green one as you can see, and the 4-hour S1 support. And at the same time, the first stop loss level is placed some 10 pips above the current market price, and is supported by the weekly and the 4-hour pivot points, so it is quite significant resistance for the pair at the moment. Actually, of course, in case we have some either negative or the positive surprises from the data, the pair may have stronger market reaction to that, and therefore we have the second take profit level placed currently at 1.5565 level, and the stop loss level is placed at 1.5620 21, and it is supported by the daily pivot point at the moment. So since I have just 30 seconds to go till the data is finally released, let's have a look at the technical indicators, which actually don't show a really clear situation on the 30-minute time frame, even though they are bearish on this currency pair on the 1 hour and the 4 hour time frames, so they expect the currency pair to decline in the next couple of hours. So we just have couple of seconds to go, so we see really upside actually reaction on the currency pair, because we have the positive surprise from the CPI, which actually increased to 0.1% in July. And I think the most importantly, if we have a look at the core CPI data, so the real positive surprise from that reading, so actually actual data came in at 1.2% on the annual basis in July, even though the expectation was only for 0.9% increase in the core reading for the consumer price index. So, and of course, therefore, we have really strong market reaction from the cable at the moment, some 40 pips initial reaction to the upside, because really the data is very positive indeed, even though it seems that the oil prices didn't have so much influence on the indicators, at least so far. So I guess that will be all actually from my side for today on the technical part for the current data release. I wish you all a great day ahead. See you all tomorrow when we are going to have, of course, our research webinar at 12 p.m. GMT. But for now, thank you very much, and I give the floor back to you, Polina.
Thank you, Max. Wonderful. And oh my gosh, look at it go. Look at it go. The big green one. Yeah, I guess that's a wrap pretty much on the economic data release for today. Once again, UK CPI year-on-year data came out at 0.1%, and in order not to waste any of the precious time of our next community member who's going to cover a webinar on one-tip box Renko price action scalping, Lucas, you're very welcome to proceed with the webinar. Dear guests and viewers, as Max already mentioned, please don't hesitate to join us at 12 GMT Research Webinar tomorrow. We'll have another data release during that. Meanwhile, enjoy all the rest of our webinars for today by community members, and see you very soon. Toodles.